Okay, welcome again. We are about to begin our transaction so you can see how this system works. But before we do that, there's something I left out and I want to explain that to you. Now, if you look at the registration area here in this upper left corner, as you can see, when you hover the mouse here, you see um, grade 9 and you see number in front in there. Now it stands for something. If we look at the record here, we started with elementary division ABC. Now, you can determine based upon the country you live in. All right, you determine how your educational steps are arranged. All right, this is based on Liberia's own um, educational step up. Now, even in Liberia here, not everybody starts with ABC. Alright, some start with daycare and then they continue to nursery 1, nursery 2. Then you come to K1, K2, that is kindergarten 1, kindergarten 2, before coming to grade 1. So, I don't know how yours is in your country. So, it depends. So, just to make that clear. Now, take for instance, you want to jump to, there is the first class, there is ABC. Now you want to jump straight to maybe 6th grade. Alright, that's the 7th grade. You want to drop to the 7th grade class. So you don't want to scroll through looking for 7th grade. Because as you can see here, we consider each class to be at least 150 students. And we know that most classes, some schools will have class 1, class 2 for a particular class. You may have 1, 2, 3, maybe 12 grade 1, 12 grade 2, 12 grade 3. So we assume that at least 150 students per class. That's how we arrange this thing. So now you want to jump straight to 7th grade. Alright, because this is a junior high system here. We have the senior high and so on. So now if you hover the mouse here, you look for 7th grade. Now if you can, as you can see there, 7th grade is the number for 7th grade is arrow 1772. So when you have that in mind, arrow 1772, then if you look here in the upper left corner here, right under the click, this is a clipboard. This is a clipboard section of this thing. Now if you look right on the clipboard here, you see this area here. So what you do, if you see the number there, arrow 1772, just come here and write arrow 1772. When you enter, it will take you automatically to grade 7, as you can see here. So that is one of the features of this thing. If you want to go to grade 9, just hover the mouse here, it also right here. All the pages have this. So you just hover it here. Let's go back to the first page there because we are close to it. If we come here and looking at this here, you will see something like, also want to go to 6th grade. This arrow 1576. So you just say arrow 1576. 1576. You enter, you see yourself right here to 6th grade. So this is one of the features. So I just want to make that clear to you so you can know how to jump there, because you may not want to be screwing to go from class to class. You just want to jump there straight, and that's the simplest way. That's why we arrange the number here in the column here. Now this page has some information at the ending here. I also want to make that clear to you. If you look here, there is like a summary of that page. Each page has this. Alright, what you did up there will automatically appear here. Cost of all registration fees for this class per semester 1. All the total costs will come here. because remember we have the cost of registration for all the students that you're going to put there. So we appear right here, and the total amount students paid will come here. The balance expected, that is our receivables, will come right here. And then the amount they pay, first payment, what they pay will reflect right here, and the balance that's supposed to be receivable will appear here as well. And then the same thing here will appear here, second payment and final payment. All right, that is for every page. Now this place, you see the percentage here. I will come back here to explain something to you here. The area you are not going to write. That's the reason when you hover the mouse, what do you see? It says don't ever write in a cell that has 0, because if you write there, you'll be damaging some formulas. All right, so just to make that clear to you. So now we can begin our transaction. Now let's say something. Now we're going to do one student, all right, throughout this thing because of time. Now let's start with the database of student. Let's say the school name is St. Mary St. Mary Junior High School. All right, now on here you can put a school name. For here, let me say Kakata City, Magiri County, Liberia. So now this should be in white. So when you see that, just change this to white. You don't have to be italic size. You can do it like this. Whatever it is you want, you can do that. All right. Now that's a name. So you're going to put the name of your school or every document in this place. So let's say we start with Mary Peters. Now registration is ongoing and Mary Peters has come to register. So now we try to include her in the database. So Mary Peters is here, and you say date of enrollment. All right, maybe we say she got enrolled on the 27th of September. Okay, let's say on the 9th of September. Now if the number is larger, you see it happening like that. You see it, as you can see here. So what you can do is just perhaps to reduce this amount. All right, now as you can see here, this is not supposed to be like this, so don't worry. The actual one is that you're going to get is all edited. This will be in general. Okay, that's the reason you saw that. So now we can even say the 27 now, it will close up. Now here, this is 27, this is a month, the 9th month, which is September. All right, and the year, perhaps you say the year is 2022. So you have started a year, now you're including now this student in the database. Let me try to do similar thing here. I think the currency stay here. All right, so now we have date of birth. Maybe this student was born the 16th of March. March is the 10th month, and then the year is let's say 2002. This is 02, 2002. All right, now we can define like that, or I'll say 1999. She was born 1999, so we say 99. All right, then the place of birth, we can say Monrovia. Okay, Monrovia. Then we see cell number. We say here for cell number, we can put there plus 231. All right, 886 46 783 82. That's the cell number. Now it will turn it automatically. You can still come here and write it into text. All right, so when you put that now, even put 0886 48 72 45. All right, now the original one that coming to you, that one is already packaged. All these things are well edited. So today just a practice of version here. All right, current address. Um, Presently, um, Sugar Hill Community. Sugar Hill Community is where we live. This is the Sugar Hill Community, Kakata. All right. Then we come here. We say is student how is student supported. So now that question is to you because you got it from their information sheet. All right. The information sheet gave them, or the admission form you gave them, the information they put there is based upon the information you are trying to fill in this place. So is this person self-supported or they are supported by guardians or parent? So maybe this person is supported by their parent. So put parent there. Alright. If you hover the mouse here, it will tell you what to do here. So you either put parent or guardians or self. If we are self-supported or so on. So if they are self-supported, you put honor here, honor self-supported, they put self. Send that parent or guardians, you put it right here, parent or guardian, whatever it is. Mother name, Mary Smooth. Alright. Is Mary Smooth alive? Yes. Then we got Paul Smooth. Paul Smooth alive? Yes. Great. That's how you fill in this database. So you have the information on the student. So anytime there's an issue, you can just run to this listing and then you can sort out the issue. Alright. On the original one, that same way of jumping to various classes is also in this corner here. You will see it there. That's an academic year. So the academic year you can put 20 maybe 2022 20 let's say 2023, maybe the academic year. So you can put it that, you can put it at the, in that way, and the class also will be here in the ABC fine. So that's how you fill in this thing. So now we come here to beginning value. Now St. Mary Junior High School started her year with 10,000 in the bank. Alright, that's why she started as a cash that she started with. So account receivable, alright, let's say the previous year she expected 30 a month from students and she didn't get it. That is account receivable. So let's say she expected at least $1,000 from students. Alright, then prepay rent. Okay, in her case she pay 5 years ahead, so she had consumed 1 year. Alright, 1 year. So and each year is $1,000. So I want you to get that at the back of your mind. The facility she's renting is $1,000, per year. So she pay ahead. Alright, she pay ahead. So the balance now that remain is something like 4,000. So that 4,000 is what you're going to put here. Great. Alright. Land, no, she didn't buy land. Building, no. Furniture and fixture, let's say what she had before entering this year is 500. General equipment, 300. Alright. So accounts payable, she due to pay 400 as account payable. Wages payable, she doesn't owe any instructor. Interest payable, she didn't take any loan for the last period because the information here is based on past period. Okay, the interest payable because there's no loan, so there's no interest. Notes payable, nothing. Taxes, she doesn't owe any of those. She didn't take any loan, so leave that just like that. And as you can see here, is already balanced. See here now, you see the equity I'm talking about. So all that she have here, you see liability she acquired here. There's a liability 400, as you can see. Now if you look up here, there is all the cash that she had. Now that the value of cash that she had, the cash itself is here. What she expect from people is this, and what she have paid in advance is this. So if you look at that, you will observe that it has something like 15,000 that she's paid. Now we come to her furniture 500 and so on. So you do the total assets is 15,800, and then you have something like 400 to pay people. So that's liability. All right. So that's the reason why you see equity now. The 400 is deducted from that amount, from this asset that you have here as 15,800. So it's this is deducted. That 400 that she owe people, that is deducted. So the value that she have, that is the entity's net worth here right now. That's what she have, 15,400. Great. All right. So that is just now. If you look on the balance sheet, it's already there. There is the balance sheet. All these things are reflected here. You see that? Now you see receivable and so on. When you get a receivable, there must be allowance for uncollectible accounts. That means money that you think you may not collect. All right, I explained that already. Don't worry, you will get more information about that. So now we start transaction now. So we come here now. Who did we say? Did we say Mary Peters? Okay, Mary Peters. Yes, Mary Peters was registered. Now the registration fees is 19,000. Great, 19,000. Now for the first payment, Mary paid 4,000 the first time. Second time she paid 10,000, and then the final payment time, she paid 5,000. Let's say 4,700. All right. So she left with a balance of 300. Great. So that was for registration. And tuition is 25,900. 26,900. That's registration. So first quarter, how much did she pay? She paid 10,000 first quarter, as required by the school. All right. Second quarter, she paid another 10,000. Then late payment, because you're supposed to pay. This is for first semester alone, so she should have paid all her money. So the late payment now, which is balance of 6,900, she paid 6,600. All right, 6,600. So she's left with another 300. All right, then we come to other fees. This student is perhaps in the 12th grade. Let's look at it from that point. So 12th grade. So now you can put it here, senior high. All right. In your case, in the real case, you can say 12th grade or 9th grade, whatever it is. All right. So we say other fees were charged. So let me repeat this again. Repeat this. Right, and amount charged per student. So for other fees, maybe 6,000. 6,000. The purpose of the 6,000 is for what? For WAEC. So we say WAEC. Great. So now we have first payment. All right. First payment, she paid 3,000. Sorry, 3,000 was paid. The second time, she paid 300. Then the final payment time, she still owed 2,700. So the final payment time, she paid the 2,700. So she get a balance of 0. Now, as you can see here, whatever is paid is automatically calculated and deducted. Now, if you look here, she paid the first 3,000, so automatically the balance begin 3,000 balance. See there, as you can see. Then she paid out of the 3,000, she paid 300. What happened? 2,700. Now, out of the 2,700 that she owe here, she pay all here. So the balance here is zero and reflected right here. So she doesn't owe anything for YX. Alright? Now, expensive. So now the school pays salary. Maybe the school pay salary of 15,000. Great. Supplies 500. Administrative expense 500. Rent for this period, another years. Let's say half a year. So we just leave it like that. We'll pay in the other year because that yearly payment. So we leave it just like that. Depreciation or equipment, we leave that yet. So don't play. We just leave this for now. So as you can see the summary here. Alright. So that is that. So now the expenses in period 1, in first period. Second, we got period 2, which is second period as you see here. So whenever you pay this money, that's where you, if this money was paid in second period, make sure you put it in second period. That means it was when you started to pay salary or whatever it is. So you can put it there. Alright, if that the last period time, you can put it there. Great. So now we come to the next one here. There is receivable. Now as you can see here, automatically the students have 600 to pay. This is what we expect to receive from students. Alright, so at the end of the period, let's say out of this money the student tried their best, they reduced the 600, they paid 270, balance 330. Now we come down here now, we say students still owe us. Alright, but before we go to this, let's look at donors. Maybe UNHCR visited a school and they decided to give a grant to the school. Perhaps they say, okay, we'll give you 10,000 to run the school. And maybe some eminent citizen promise to get at least 5,000 to the school. Alright, so now in your case you can put a date that was done. Alright, then at the end of this time, the donor came here and pay of this money. They pay 9,000, let's say. Alright, then the 5,000, the eminent citizen came and paid all the 5,000. So the balance here is zero. Now we observe now that we have balance of $1,330 that need to come to the school. So we consider this as receivable. Alright, this is total amount collected. This is total amount that was expected previously, 15,600. And out of the 15,600, 14,270 was paid. So the balance is 1,330. So we know that this money, we say we may not collect all the money from past experience. So let's say we may not collect 5% of this money. So we put a 5 here. If you put a 5, you'll see how much we collected. That means $66.50 will not be collected from this money. Right? So this become our allowance for uncollectible funds. That means it becomes an allowance. Now this will be an expense on our part. We got place for it, and we'll come to that. Then we come to payables. Alright, I think in our beginning value here we said we're supposed to pay somebody. Alright, so that's 400 there. We're supposed to pay somebody. So we come here and just go to our payables. We say well, let's say maybe we say Alright, Joy Enterprise. The description is something like um, 1 ampere. Alright, and the amount is 400. You get a date there, you put a date for yourself, then we get the amount paid. Of this money, before the period ended, we pay um 350. That's what we pay. So the balance remaining is 20. Great. So now, if you look at the the monthly report, you see something like this. But we'll still come back here. We're here to show you what it is. The registration we collected 18,700, and then the tuition we collected 26,600, and then the other fees we collected 6,000. So the total income to the school is 51,300. All right, and the expenses we made was 16,000. So we had a net income semester 1 is 35,300. Now we pause there, we'll still come back to the particular report because we still carry on some other things yet. So now if you come to the income statement, you will see all what we did is reflected here. These are what income. The income you see right here, 51,300, is also in the income statement here. Alright, but we'll also come to the banking area. Now in this period now, we deposited I'll say 30,000 were deposited during this period, and then the bank was good bank in Comarede. All right, so we withdrew from there during the period. We also withdraw something like 26,000. Great, during that time. And then other fees that were charged came up to 200, and then that is how we have here. Now if you look here, now you see total deposits 30,000, and total withdrawal 26,000. Now you got the bank charges 200. So if you out of this, the bank balance here is 3,800. Now if you go back to the report, you will see this reflected right here. See your 30,000. You see that? That was deposited. This is bank charge 200. Then the withdrawal amount 26,000. Total is 3,800, as you can see on the banking record right here. Now this side of the banking record is for loan. So let's say this particular period now, the current period we are in, we decided to take a loan. Alright, maybe to do other things. So went to the bank, we took something like 18,000. Alright, during the current period. And this amount here, we are due to pay 12% interest. So I see, as you can put the 12%, just put the 12, and you see it will calculate automatically and tell you what the interest is. Now when we as an entity, when you're recording like this, the repayment is different. It's reduced in the balance sheet. So this is not an expense. How you understanding that the repayment of the loan is not an expense? What you consider an expense is the interest that you're going to pay. So that becomes an expense, and that is what going to appear on your income statement. It's also going to appear to your expense area. But the repayment area, the loan that you took, will be reflected on the balance sheet, and it will be reduced as you do repayment. Great. So I hope that is clear. So the loan repaid during the period we were able to reduce this loan. We pay something like 6,000. All right. Great. So now, as you can see here, the total loan acquired was 18,000. Total interest payable is $2,160, and then the total repayment that was made, 6,000 were repaid. So the balance now we have is 12,000. That is our loan. All right. So this amount will be appearing as we see on the balance sheet and what have you. So now if you come here on the balance sheet here, you see the loan 12,000 is what we reflect on the balance sheet. Why? Because the 18,000 you told you reduce it by 6,000, so it will reduce on the balance sheet. That means it will increase your capital. You see there, your equity will increase while your liability is dropping. So this is how it affects your balance sheet. So the balance sheet, like I said, it shows the the status of your business, the financial strength of your business. Now look here. When we came here, I told you we'll come back to show you something. Now this is $67. The $67 there is the allowance for uncollectible account that we saw on the receivables here. This one, as you can see here, 5% we will not collect from people, so it becomes uncollectible. So it will appear to the balance sheet. It will be deducted from the account receivable. See that? So we will not get this one. So this on the balance sheet has to be readjusted. So the real amount can come here. So this is the one considered now. So if you minus this amount from this is what you're going to get. So now we have 66 at 50 cents, but here it was rounded up. So even if you try to increase the zeros here, you will observe that 66 at 50 cents will come there. Alright, but you don't have to worry about this. So don't worry about that. It will always reflect correctly in all our totals. Right, so this is the balance sheet. Okay, then we continue. There is the cash flow statement. There are other things we are not yet done here. When we do it, other places with something nice. You can see the net income is already here, 35,300. There is a net income. Now, cash flow statement, like I was explaining, helps donors or investors or banking institutions to understand how money comes into your school and how money goes out of your school. This statement can help them to understand if actually you are handling money matter correctly. So this is a cash flow statement. More institutions can request for it before they can help you. Alright, then we come to taxes. As you can see here now, we have 35,000 as our net income. So maybe on this amount, the government require that we pay 4% on our net income. Now in your country, you know how much government takes from your business gross, if I'm saying gross income, or let's say net income before taxes. Alright, so you know your percentage, but for this I would say 4% is what government deducts from this money. So the more you put a 4 here, you will see automatically that means we owe government $1,412. Now this amount continue here, as you can see. Now going on to the payroll. When we go to the payroll area, then we'll see what will happen here. We'll still come back to this document to show you something there. So we come to the payroll. Now the payroll here, let's say we have matter pay. Matter pay is the principal. Alright, it's the principal, and her salary is 6,000. Alright, then we'll come to Joseph Saki. Joseph Saki is the vice principal. Alright, vice principal, and vice principal takes let's say 4,000. Alright, and then Yasa Kole. Yasa Kole is the registrar. The registrar is paid 3,500. All right. Then we have instructor um, instructor Paul Small. Instructor Paul Small. He's just a teacher, so we say maybe he's paid um, he's paid 800. Right. Then uh we have Salome Rogers. Salome Rogers, a teacher. Alright, Salome Rogers, she's also paid 800. So now let me see what we have here now, because our salary is 15,000, so we can exceed it. Oh no, we have to drop something here. So let's say 750 here, and we'll have another 750 here. Alright, so this is the salary structure. So now we came here, and the taxes from government angle is 2% on everybody's income tax. Everybody income is 2%. Everyone 2%, 2%, 2%. So as you can see here, the principal is paying $120 as tax. Alright, that is what government is taxing him for income tax. And then the vice principal is paying $80, the registrar is paying $70, and the two teachers paying 50-50 each. Alright, so the percentage here is fairly distributed, right? Great. Then we come to the salary advancement. So now the net salary here is $5,880 for the principal. So we'll say principal collected 3,000 or 4,000, plus 3,000 of his money. Alright, as salary advance. Then the vice principal here took 2,000, and the registrar here took 1,500, and the two teachers here, one of them took 500, and the other one took maybe 300. Those are salary advance. Alright, you can put a date here. Now if you look here, you see total deduction. Now the total deduction is the taxes that they pay plus the salary advance. If you add the both together, you will come up with the total deduction. So now the balances that they have here, the principal, the school still owe the principal $2,880, vice principal $1,920, and the registrar $1,930, and the two teachers, one of them, the school owe $235, and then the other person, the school owe $435. So let's say at the end of the month, what you gave them as salary, you pay them some of them money. Maybe the principal didn't get all his money. He got 2,500. That's what he got at the end of the month. Alright, that what they perhaps they bought whatever they want to pay him. And then the vice principal got 1,500. Alright, so as you can see, the amount they're exchanging. Then the registrar here got all his money, 930. So balance is 0. Then we have the teachers also got their money, 35, 235, 0. And then the other teacher got her money to let's say $435. So that balance is 0. So now if you come at the foot of this document, you see some summary down here. The total gross salaries or wages for 15,000. The total income taxes came out to 300. The net salary, all the net salary came out to 14,700. The advanced salaries, all the advanced salaries came to 7,300, and the total deduction came out to 700 and that's 7,600. So now the total amount paid was 6,600. That means it was the amount that was paid at the end of the month, what was given to them. All right, it different from the deduction. So that means after the deduction, this is what was given to them. We're talking about this column, this one. This is what was paid to them at the end of the month. So the total that was paid to them at the end of the month, that's what we see here. So now the total balance salary payable is 800. That becomes the salary payable. Now if you come back to our balance sheet here, if we check there for wages or salary payable, you will see something there. Yes, wages, salary payable, $800. That's what we have here. Now the interest on the bank account, the 2,160, as you can see, is it appear here, and you see the taxes that were paid, 1,712, everything here, all here. This is how uniquely this document is like. It's not compared to many other documents. For this, you don't need an accountant to do all the calculation for you. See, everything is done in the system for you. So when somebody says, "Let me see your balance sheet," you just print it out. You're going to waste your time to do any other thing. All right. So that was for the payroll. Now come to the uh, notes payable. There were no notes payable, as we see there. So in our beginning element to start with, we didn't have notes payable and we didn't create notes payable. So maybe if we want to create that, we can create it. We can create it if we wish to. Okay, but not leave this for now. The current time we didn't do any notes payable. If we did it, you can put it there. You just put the purpose for the note, the amount for it, the date, and then the amount that you pay towards it before the period end, before your accounting period end. All right, and then normally school accounting period is just for a year. It's not like businesses that somebody can do monthly reporting. All right, but it's for the whole year. But during that time, all the transactions that you have carried out, the record will be there. So you can print it out, you will still see your record. What you want to do it 1 month time, report you want to print out, you can print it out. Alright, and that's that. Now we come to fixed assets here. Land, we didn't buy land during the current period. Building, we didn't buy any building. And the furniture and fixture, we try to maybe improve on it. We put at least 500 there to improve it. Okay, so we leave it just as that, and we come to equipment. We bought one laptop, 500. All right, for the laptop, and the date, you can put the date there. So the laptop, we say 5. Okay, let's say we expect to use a laptop for 3 years. So for 3 here. Now if you put 3 there, you will see this will change automatically 36 months. But I don't like this small percentage, but nothing wrong with that. If that is what you have, you can leave it like that. But for the purpose of this, let me try to say, let's say full okay, full months, 4 years. Okay, let me see something like 5. Okay, let me say 3 years. Let's say 2 years. All right, no, let me go back to. Let me just say 4 years. We expect the laptop to spend 4 years with us. All right. So now you can see what the annual depreciation will be. That means annually you will pay $125 for the laptop depreciation. Now let me explain a little bit to you. Maybe you may not be okra into these accounting terms. When you talk about depreciation, the equipment that you have, as you continue to use the equipment, it will be wearing away. That means it will not be the same. For example, if you buy your laptop today, after 6 months, that laptop will not be like the way it was when you bought it new. It's gradually passing off. So that is what you're going to be paying money for. In other words, you're going to be depositing certain amount But that money, that expenses is the only expense in business that you don't get out. It remain in the business, but it is there. That's why you look at accumulated depreciation. So that money is within the business, so that whenever the laptop spoils, you will know that you don't have to scratch your head to buy a new laptop. You already been paying for that laptop, but in the business. Now, even if you want to sell the laptop, if you look down here, maybe you have used the laptop for the time being. All right, there is your money depreciation. This is what you be paying every month towards that laptop. You pay for it, but it's in the business. You're not giving that. You're not paying that money that expensive to any other person, but it was in the business. So, if at all you observe that maybe you have been paying the depreciation and you have reached a certain level and you want to sell it, this is where you're going to put the amount here. When you sell it, you're going to put the equipment sold out. So you're going to put the amount you sold it for. If you sold it, there is now the value for it is now $375 after maybe a year, and you want to sell it. All right, you want to go to somebody and say, okay, what we do? Please, I can give you the laptop. The laptop worth $375, but I can give it to you for 300. So when you give it 300, what will happen is loss on sales of equipment, if any. So this becomes your loss, $75. All right, that's why it is. So if you sold it out, that's why you put it. So we assume that we didn't do that, but just to make that clear to you. So that is your fixed asset. Then we have here is prepaid expenses. All right, we have our loan. Okay, we say full. We already pay for the first year. Let's say rent. So for here, we say there were it was 4,000 value of our prepaid expenses when we enter this year. So the year ended, we pay another 1,000. So it's we have reduced to this. Prepaid utility. Prepaid utility is just maybe current bill or that you pay, or water bill, whatever it is that you pay ahead. But in this case, we didn't pay any utility bill ahead of time, so we leave it just like that. So that is how we end this particular section. This side is semester 2. All right, semester 2. So perhaps we will do something else there. Now, if we come here in semester 2, as you can see here, this particular area automatically is already set. Now when I come, I will explain that to you. So let's stop here for now, and then I will see you in the next video. Right, so thank you for watching.